Hey everyone, welcome back to Corporate Decoder, where we decode the complex world of corporate finance so you don't have to. Today we're diving into a filing from the Federal Home Loan Bank of Indianapolis. Now, normally these filings are super dry, but this one, well, let's just say it involves a lot of borrowing and lending, and that can always get interesting, especially when you're dealing with millions of dollars. Stick around to see what this means for the market, but before we jump in, if you love getting these clear, concise breakdowns of financial news, make sure you're subscribed, and hey, we've got a fantastic community over on Discord where we chat about these things in real time. You can find the link in the description below. So what we have here is a Form 8K, which is basically a report that companies have to file when something significant happens. Think of it as a public announcement of important events. For the Federal Home Loan Bank of Indianapolis, this report is all about their financial obligations, specifically the bonds they're issuing. Essentially, this filing tells us that the Federal Home Loan Bank of Indianapolis, which we'll just call FHLB, Indy for short, is getting ready to issue some new bonds. These aren't just any bonds, they're called consolidated obligations, and they're basically loans that the FHL banks as a group are responsible for. And when we say consolidated, it means they're bundled together, and the FHLB Indy is going to be the big player, the main one responsible when these specific bonds are due. The date here, July 9th, 2025, is a key date. It's the trade date. That's when the deal for these bonds really kicks off. You'll see a lot of these CQ's IP numbers. Think of them as unique identification codes for each bond, like a social security number for a financial product. Then we have settlement dates like July 11th, 2025. This is when all the paperwork and money exchange hands and the bonds officially start. And maturity dates like July 2nd, 2030. This is when the bondholders get their principal back, meaning they get paid back the original amount they loaned out. Some of these bonds have maturities of a year or more, which is important because the bank doesn't report on short-term bonds in this specific filing. Now let's talk about the money. We're seeing coupon percentages like 4.55.5 That's the interest rate the bank pays to the bondholders. It's pretty straightforward for this particular bond. And the amount, $15 million, that's the principal amount or the face value of this specific bond said. Let's look at a few more of these. Settlement date is July 15th, 2025. Maturity date is July 15th, 2027. This one is shorter term than the first one we looked at. Notice the non-callable here. This means the bank can't just decide to pay off this bond early. They're locked into paying the stated interest for the entire life of the bond. That gives bondholders some certainty. And this variable single index floater means the interest rate isn't fixed. It will change based on some external economic indicator like an interest rate index. So the amount of interest paid will go up or down depending on economic conditions. And this bond is for a much larger amount, a cool $100 million. Another one here, trade date July 9th. Settlement date July 24th. Maturity date July 10th, 2030. This one is optional principal redemption. That means the bank can choose to pay back this bond early on certain dates if it makes financial sense for them. The Barutin call style means they can redeem it on specific recurring dates. It's not continuously callable like an American bond, but it offers more flexibility than a European bond, which can only be redeemed on a single specific date. And this one carries a higher interest rate, 4.850%. That's a decent chunk of change. And this bond is for $50 million. Here's another one, trade date July 11th. Maturity date is July 19th, 2027. And this is a big one, $350 million. And the very last one we'll highlight today also with a trade date of July 11th. Maturity July 16th, 2027. And this one is for $200 million TOR. So if you add up all the dollar amounts we just saw, that's 15 million plus 100 million plus 50 million plus 300 million. That's a total of $815 million, all being issued or managed by FHLB Indy in this single report. That's a lot of money being borrowed and lent out. Now, a very important point here. The filing clearly states that these consolidated obligations, these bonds, they are not guaranteed by the United States government, while the FHL banks are government-sponsored enterprises, meaning they have a special relationship with the government. Their debts are their own. This is crucial for investors to understand. If something goes wrong, the full faith and credit of the US government isn't backing these specific bonds. The filing also includes some important disclaimers. They tell us that they aren't giving us all the nitty-gritty details of every single bond. We also can't use this report to track their total debt because they are excluding those short-term ones we mentioned, and they don't tell us exactly what this borrowed money is being used for. Plus, the dollar amounts shown are the face values or par amounts, and these might not match what they report in their official financial statements prepared under standard accounting rules. This is because the face value doesn't include things like discounts or premiums they might get when they actually sell the bonds. This is like saying the sticker price of a car isn't always the final price you pay after negotiations and fees. The report is officially signed off on July 15th, 2025 by Lana D. Bookman, who holds the title Senior Financial Reporting Principal. Now let's put on our investor hats and think about what this all means. FHLB Indy is acting as a major financial intermediary here, raising significant capital through these bond issuances. They are essentially borrowing large sums of money from investors and then presumably lending it out again, likely to member institutions like banks and credit unions. The wide range of interest rates from 4.50% up to 4.85% of ad and locally to member institutions like banks and credit unions. The wide range of interest rates from 4.50% up to 4.85% and von rates from 4.150% up to 4.85% on these particular issues, and the mix of fixed versus variable rates shows they're managing their borrowing costs across different market conditions. The fact that some bonds are callable means they have the flexibility to refinance if interest rates fall, which is a smart move for managing their own expenses. However, the non-guaranteed status by the US government is a key risk factor. For investors, this means they need to assess the creditworthiness of the FHL banks themselves, not just rely on a government backstop. The total of over $800 million issued in this filing is substantial. It tells us FHLB Indy is very active in the debt markets. We need to keep an eye on their overall debt levels and how they are managing it, especially considering changing interest rate environments and economic stability. While this filing doesn't give us a direct look at their profitability or how well they're lending the money out, it clearly shows a significant operation in the borrowing space. In my opinion, FHLB Indy is playing a critical role in the financial ecosystem. They are a large borrower and intermediary. The strength of their operations really hinges on their ability to manage interest rate risk and credit risk on their lending side. The fact that they are issuing a variety of bonds with different features like callable options and variable rates demonstrates a sophisticated approach to funding. The risk, as always with financial institutions, is if the borrowers they lend to start to struggle, or if interest rates move in an unfavorable direction for them. But based on this snapshot, they are actively meeting the market's demand for funding. What's your take on these bond issuances? Do you think FHLB Indy is positioning itself well for the future? Let me know your thoughts in the comments below. If you found this breakdown useful, please give this video a thumbs up. It really helps us out. And of course, subscribe if you haven't already for more corporate decode content. Don't forget to join the conversation on our Discord server. Thanks for watching, and I'll see you in the next one.